Hello everybody, welcome back. Let's have a look at Bitcoin and we'll have a brief look at the DXY as well. So in a nutshell, it's the same as it's been for ages. We've been talking about this range since we broke into it. I said, look, the range is going to be about roughly 40,000 to about 49,000, give or take. That's going to be what I think will be the accumulation range. We'll establish a range around this zone and this is going to be it. And for the moment, that's basically where we still are. So it's no different to what I was saying when we broke into it in December to it is this very moment in time. We're still within the range, but the good thing is we're towards the bottom of the range, which means that there's support here. Being up at the top, this is what I was saying, we are at the top of here. So taking altcoin positions, you have to be a little bit careful because even though they were all at significant supports, Bitcoin's at significant resistance, which means that, despite having a really good setup on an altcoin, it can just be cancelled out instantly because Bitcoin drives the market. But this time round is slightly different because any opportunity that you see with an altcoin, if there is a setup there, you could take it slightly a bit more seriously because, Bitcoin's at support, so a bounce would be implied rather than a breakdown. So there's more chance of it going up than there is going down. That doesn't mean it can't come down though. So let's just face it. What we're looking at then on the 4 hourly, we've got 2 drives of bullish divergence on the 4 hourly. It's not enough. We would be looking for another low to be put in. Maybe if it just comes down to the 41,000, 40,500 or thereabouts, maybe we even try to retest this wick. We'll probably get front run ever so slightly on it, and then the bounce could be lifted up towards this inside range of the accumulation zone, the area that we broke down from, basically between 45 and 46,000 thereabouts. That would be the initial target from this bounce. Anything on top of that would be a bonus. If we go down to the lowest term time frames, we do see that we've got 3 drives of bullish divergence on the hourly, same on the 2 hourly as well. We've got 3 drives here of bullish divergence as well, which is good. Anything on the 3 hourly, just for fun? We'll just have a look at the 3 hourly. No, we've just got two drives there. So yeah, the hourly and the 2 hourly, we've got the bullish divergence. The 4 hourly is brewing a third drive, and everything on top of that from the higher term time frames is pretty nasty looking, to be honest with you. It's not looking particularly good. We're still below the 0 point on the MACD here, despite having green ticks on the histogram. It's pretty weak. So people aren't really buying particularly at this level, or they're not particularly interested in this level. I think they'll likely step in if we go down into another leg, because that would imply oversold Bitcoin. Decent value for worth scaling back in, basically, for those who haven't already scaled back in. For me, I've already got my buy order. It was down at 40,600, so I got mine in. I'm not looking to buy any more Bitcoin unless it actually breaks. It really does break down, properly break down, because any low from this level now, just like I say, as we've seen on the smallest term time frames, would imply at least just a bounce anyway. If we break down from this overall zone, confirm it as a massive breakdown, we go much lower, then yeah, I'd start to incrementally buy back. But we're not there yet. And we may not get there. We are still in the accumulation range that I believe is what we are in, the one that we were talking about since the beginning of December. So it's no different. This is why I think annoys people. We look at things on daily time frames, really, and on weeklies, right? We suggest an analysis for a projection of either decent upside or horrendous downside, and because they're on long-term time frames, people are sitting there waiting for those moves to play out. I've been saying that there's a bounce implied, probably for weeks now, as we have been down at these levels. We've got the first bounce, that's fine. We're now looking for another bounce, a bounce that actually takes us up to this level, between around 46,000. I think that's quite likely, to be honest. I think it's quite likely. So that's Bitcoin for you. Let's have a look at some of the outside forces. So there's all this stuff about Russia, this, that, and the other. I really don't see that is actually going to take place. I personally just don't see that is something that should be taken seriously. I don't think there's going to be an invasion of Ukraine. I think it's all just political nonsense, basically. It's like a game of poker, isn't it? And everybody's bluffing at the moment. And so provided that's all it is, then it's fine. It's just politics. I don't see how anyone could possibly benefit from an invasion of the Ukraine. Although, anything is possible, as we know, as crypto traders, anything is bloody possible. So that, I think, is having an impact, because that would have an economic impact for the entire world, despite, forgetting about, all the Illuminati doing arms trading or whatever it is that you might have read about or seeing on videos on YouTube. I mean, the overall economy would definitely suffer from that for all countries, from all the energy reasons that are stated. So that's one side, which is definitely giving the market subtle uncertainty. But the DXY, we've spoken about this many times, the DXY does have an impact on crypto prices because it references how much or how strong or how weak a dollar is, and everything largely is traded with crypto dollars, Tether, etc. So the dollar dropped off from the CPI report, which it's just silly, isn't it? Really, it's just silly. I mean, we've been saying that this has been a strong setup the entire time. It still remains a strong setup, and that sell-off, it was just a silly old thing because of the 7% inflation rate. The dollar was doing the same thing the second before the report came out, and it's doing the same thing now, which is the tapering has already been established. I don't think they're going to be speeding it up anymore. They've already decided to speed it up. They're just going to let it ride. This is a strong chart. It's going to do its thing. This will continue to move up. The question is, how far is it going to go? And if we think about where we are right now, we're still below pre-pandemic levels. Before the peak, this was obviously the March crash, where it caused this huge dump and a massive pump, and then an enormous sell-off. So this is, I think, the destination, the overall target area of where we're looking to take this DXY. And so the big bounce that we've got so far is encouraging for those who want to trade Forex. Because it was such an obvious trade. I mean, the fundamentals have stayed the same. This is just a silly old panic sell-off in relation to the inflation report. We're back up and tested the centre of this Bollinger Band. We're getting rejection from there now, but over the last 5 days we've come straight back up into this major range, the range which used to be a support. It could easily be a support now, being supported from it now. So I think basically when it comes to the DXY, we're going to play out this overall range anyway, but we'll see how strong we are if we can remain above 95.5. No problems with the DXY. The DXY is still doing its thing, and it will continue to do its thing. But we also spoke briefly about how having such a strong DXY doesn't necessarily mean that everything in the world is going to go down. It does mean that it's going to show its true value if, let's just say, Bitcoin and crypto and anything goes up while this is continuing to go up as well. That does imply extreme strength and good value. But at the moment, where everybody's so uncertain, sitting around on sort of biting their nails and worrying about what this really means, look, we were trading at higher levels than this. Not high levels with Bitcoin, but we were continuing to make higher highs and higher lows as the DXY was going up as well. So it's not the be-all and end-all, but it is a bit of a guide to, if Bitcoin hasn't got a good setup, for instance, or at least on the higher term time frames, and this one does, then it's going to be slow. It'll be slow at least for Bitcoin, if not slow, sideways and down. But I think the majority of this rally has moved, and I think the majority of this downtrend has played out. So I think what we're going to both do on both of these charts is basically go find a range to basically trade within a range. Same as Bitcoin's in this, what I believe to be an accumulation area. I think this is going to be like a consolidation area, and yeah, I think it's likely that we do break to the up outside of this 97 area. But I don't think it's going to impact crypto an enormous amount. It's just going to hold it back from going super crazy. Because let's face it, we've been spoiled with the DXY. The DXY spoiled us. Since this time last year, we were absolutely raking it in. We were loving it. We were laughing all the way to the bank. Everything was easy. And now this is where traders really have to trade. You have to work for your money this time, rather than just pressing the green button. Do you know what I mean? And just enjoying the gains. So the DXY is doing its thing. Bitcoin dominance, we've not looked at this in a while, still bearish, which implies some altcoins can remain strong, but because we're hanging around at these levels and we're finding a bit of a base, do you have to be slightly cautious about how this is going to work out in the short term? Because if we do turn up bullish on the Bitcoin dominance chart, then things will flip around and things will get worse for altcoins. And if we look at the hourly, the 2 hourly, they're all actually quite nice looking. The 4 hourly also quite strong looking as well. So I would hold our breath on holding any altcoins for prolonged periods of time at this stage, just to cover your back. A larger Bitcoin position is usually always the best place anyway. I like to trade using Bitcoin as my base currency, so going into altcoins, coming back out into Bitcoin, blah 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 blah, increasing my Bitcoin amount all the time. So I think at this stage now we should really be a little cautious of being exposed to altcoins, despite that having strong setups. small scalpy trades, if anything, and then going back into your Bitcoin position, or Tether if you prefer that. But I think as Bitcoin's at a major support, I think my Bitcoin position is that's my preference. You know, I look to the long term. Everything's long term. So making trades using Bitcoin, going back into Bitcoin, it doesn't really matter what the price of Bitcoin is. Just keep stacking those sats up, building up the amount of Bitcoins that I own. And let's have a look at the total market cap. So the total market cap on a weekly here, including Bitcoin, so all crypto in one big bundle on a chart, coming back down to test that major level, which is the 50 exponential moving average on the weekly. We've got 3 drives here of hidden bullish divergence on the RSI, and again coming back down to test a very significant level, which is currently roughly, it's about 1.8 trillion, 1.9 trillion, give or take. So again, that I would be looking for a bounce on this level as well. So talking about bounces again, I know people are sick of hearing me saying the word bounce, but that's what we're looking for. We're not looking for a bounce and a recovery, although that could happen. That's happened the last time we came down to test the 50 exponential. We've come down to test it again. This was a panic sell-off, so it's slightly different, a much stronger looking chart despite the huge dump that we had. Yeah, this is more of a consolidation, which could bring us further down. But again, just like any chart, if you're at a support and you've got confidence in the overall chart itself and how it's held up in the past, you think about the outside forces like that are helping drive all these prices down. So you've got the Megatron virus is a bit of a non-event now. I don't think that's going to impact. I think that's old news. I think everything's going to be okay with that. The main thing now is the tapering, which is allowing people in cash positions to actually basically be the best place, really. If you think about what you're doing in a cash position, your cash position is going up in value as stocks, commodities, not all commodities obviously, but stocks, crypto, and most commodities go down. Then you find yourself in a very strong position when we reach a particular level of interest where that narrative is flipped and it's completely the opposite. So then either cash goes static and assets go up again. So the cash position has generally been okay for most people, at least for the last it's been very good for most people over the last 4 or 5 weeks. So at the end of the day, like, we are still looking for a bounce, and the bounce would just be a bounce. We're coming down to test that lower levels now. We'll just, like I say, dip our toes into the 40,000 area and then see what the 4 hourly presents us with. And I'm still looking for the bounce to move us up to this level. And again, bounce. I know you're sick of hearing it, but this is what we're talking about. We're talking daily term time frames. We're looking at weekly charts. So I suppose on a daily basis, when you hear me say the same thing over and over again, it's because it's still the same setup. It's still the same setup. Smaller term time frames offer a little bit of clues into what's going to happen when we test these lows, which is a bounce. Larger term time frames still very strong in its downtrend. The pressure is certainly on, as we've got the 10 exponential basically being the main area of rejection on this daily, which is not a good thing to see, because it's the first moving average of any significance, and we can't hold above it every single time, every day. We've come up to try it and we can't handle it. So daily is still pretty strong with its down pressure. The hourly, 2 hourly, and possibly the 4 hourly give us a little insight into the fact that we could get a relief rally, even if it was just up to a mere 45 to 46,000, and that could happen any minute. But first of all, another grind of this low area, 40,000-ish area, is probably most likely. Right, I'll leave it with you there. Thank you for watching, guys. Hope you have a nice day, and take it easy.